Hi and welcome to the FinancialFox Mining and Metal Special. In this episode, we are going to dig a bit deeper into one of our favorite metals, uranium. Although prices are still holding back, it is generally agreed that it holds strong potential to shake up the commodity market in the near future, with a rapid upturn that can bring substantial returns for investors who bought at the bottom of the market. Some analysts still think it's time to watch and not to buy, while others believe it's time to secure your position in those uranium companies best placed for the turn. We are not here obviously to advise, but try to give our investor a bit more insight into what we believe will be the next big bull run. For that, I will connect to Brandon Munro, a well-known international uranium market expert and also CEO of Banneman Resources, an Australian-listed uranium company which is developing the world-class Etango uranium deposit in Namibia. How are you, Brandon?
I'm really well, thanks, Stefania. How are you?
I'm fine, thank you. So I understand you are in Namibia at the moment.
I am indeed, yeah. The Namibia Chamber of Mines is holding a mining expo at the moment. And I must say, it's very impressive what the industry can put together. It is a small country, only a couple of million people in the population, and a relatively small mining industry, but it's very, very vibrant. And you can probably hear and see some of the activity going on behind me.
Okay, so let's talk a bit about uranium. Globally, we see governments are finally taking positive steps towards nuclear for clean energy transition. I mean, we have seen, for example, for the French government decision to delay cutbacks to nuclear power by a decade, obviously with the aim of making the country carbon neutral by 2050. Can you explain to us why nuclear is such a desirable alternative energy source?
Yeah, I'd love to. So the absolute imperative for attaining carbon neutrality in the large economies of the world, I think, is well understood. And the view over the last decade has been that, well, we can probably rely on renewables to achieve all of that. And where we've got to at the moment is in an understanding that's growing that renewables, whilst they play a very important role in achieving that carbon neutrality, they're still a long way from offering consistent baseload grid stability without emissions. And when you look at the baseload power sources that are available 24/7 in all climatic conditions without emissions, that really only leaves two alternatives, and that's hydropower and nuclear power. And of course, hydropower, well, it's undergone a very large growth profile during the 20th century, and there's widespread environmental concerns in most situations that hydropower will have damaging effects on the environment. And so I think because of that, Stefania, we're seeing more and more acceptance from both supporters of nuclear power and even opponents of nuclear power that nuclear power is an absolutely essential part of the energy mix if, as a society and civilization and humanity, we are going to achieve the prerequisite and necessary goal of decarbonising our economy.
But Brandon, is uranium really cleaner, I mean, and cheaper than other source of energy? And also, how do you see this clean energy revolution developing?
So I would advocate it being far cleaner than most other sources of energy. Uranium, of course, and nuclear power have a difficult reputation in some parts of society, and that comes largely from the fear of, first of all, radiation, but also the waste products from nuclear power plants. But what I would say is this: the waste products from nuclear power plants are very concentrated, they're very contained, we have them in our control, they haven't been sent up a smokestack or put into a river, etc., etc. And we do, as an industry, understand very, very well how to control and safely deal with that waste product. So whilst there's still a long way to convincing many parts of our society that this is a better solution, I can tell you that having spent a lot of time in the nuclear industry with some very smart engineers who spend their life on this, it's a very viable, safe solution.
Okay. Some Some analysts talk about 2018 to be the tipping point for the uranium U-turn. This, in fact, seems to be delayed. Do you think it's due to the oil prices going up following Donald Trump's decision or not?
No, I think, in fact, the reason why we've had flattening of the uranium price in that period, it does have a lot to do with the US, but it's not, in fact, oil prices. Typically, uranium and oil prices are quite positively correlated. So in a market that was functioning well, an increase in the oil price would add further stability and support to the uranium price. Stefania, what in fact has happened is there is a Section 232 trade investigation underway as we speak in the United States, and that is into imports of uranium. And this is the same provision that your listeners and audience would know was used by the Trump administration for aluminium and steel. And in this case, it's for uranium. The reason why it's had a very dampening effect on uranium sector activity and therefore the price is because the petitioners for this investigation are seeking some form of quota relief that would favour US production of uranium. And in these circumstances, the utilities just aren't sure which way the Trump administration is going to go. Yeah. There's a wide range of potential outcomes. And of course, the Trump administration has proven a successful negotiating tactic is being highly unpredictable. So no one really knows what's going to happen, except that we know it will happen soon. And for that reason, the utilities around the world are deferring all of their purchasing and procurement decisions until they know what the landscape looks like.
Okay, let's look at China, which is the world's largest energy consumer and one of the countries that is at the forefront of the clean energy revolution. So China is pushing for more nuclear reactors to be built. Obviously, there is a public discontent on environmental problems and pollution. So basically, unlocking the potential of cleaner alternative energy sources now at the top of the Chinese leadership priorities. Do you think China is going to be the main country to drive the uranium market? And if so, what is its role and power?
I very much believe that. China is still not the largest consumer of uranium and producer of nuclear power in the world, but that will change, and it will change in the next 10 years. The comments that I made about the attributes of nuclear power being consistent, stable baseload power with no emissions is extremely important to Chinese society and their leadership. And as you pointed out, they do have a voracious energy appetite both now and into the future. They're 70% reliant on coal, and for the imperative to change their air pollution standards and make the skies blue again, they're going to not only need to supply this increase in electricity from clean, low-emitting sources, but they need to start reducing the amount of coal that they're burning in their electricity system. And they can't do that with non-baseload supplies. They don't want to take one baseload source of energy, being coal, and replace it with an intermittent source of energy, which is renewable. And that's where the massive opportunity for nuclear power exists in China. That's why we're seeing them play an incredibly important role, not only in uranium consumption, but an increasing role in uranium mining, conversion, enrichment, fabrication, and now with the imminent connection to the grid of their very first indigenous Hualong 1 reactor, we're about to see them really enter the world stage as a nuclear equipment vendor and supplier. And that's a large part of the Belt and Road Initiative, in my opinion, and I think we'll see it playing a far more prominent role going forward.
Okay, and we are also seeing a downturn trend in uranium supply. I mean, US uranium production has hit a low this quarter with 74% down from 2018. Obviously, as a result, uranium is placed as one of the top mining commodities, with prices expected to rally in 2019. But we still have to wait, as you said, the US President decision on a limit input for uranium, which should take place in July. So what are your views on the 232 section and your expectation? Do you think we are going to see more utility buying in the second quarter of 2019?
Yes, I think we will. I don't have a particularly strong view on what the outcome will be from Section 232. as we said before, it's highly unpredictable. But what I have done is I have had a very deep dive into every conceivable scenario of what might emerge from Section 232. And I've taken scenario by scenario and analysed what effect that's going to have on the utilities, what effect that's going to have on the producers, on the market, and from that tried to extrapolate my opinion on what effect that's likely to have on the price. And the thing that I would say is that in all of those scenarios, I cannot produce a set of circumstances that leads to the price going down. Some of those scenarios lead to a more accelerated increase in the price, of course, and some of them are a little bit more static, but they all lead to an increase in uranium price. And the reason for that is utilities have been holding off. They need certainty, and the sheer fact that the resolution of Section 232, good or bad, will introduce certainty to them means that I believe that the utilities, both in the US and outside the US, will need to start entering the market to initiate some long overdue procurement programs.
So when do you see the turning point for uranium spot price coming?
Well, I think we can more or less say that it's bottomed. It has come off a little bit this year, but it's still sitting above its 2017 lows. So from an investment point of view, I think the turning point is taking place at the moment. In terms of when we start to see a rapid escalation of price and a recovery of the market from the current unsustainable levels, I see that taking place in the last quarter of this year. And one important barrier, technical and psychological, that exists in the sector at the moment is $30. So I see a recovery emerge out of Section 232. And once we start to see that gather momentum from $25 today and close the gap on $30, which is this important barrier, I would then see a rapid escalation from $30 through to $35. And for my money, I think we'll see that before the end of this calendar year.
Okay, how about Japan?
Japan's facing the difficult reality that with their nuclear fleet having largely been turned off over the last 8 years, they've had a huge escalation in energy costs. They've had a huge escalation in emissions. They've gone well backwards compared to all other large developed nations on that front. And as a result of this economic pressure, they've returned their first balance of payments deficits in more than 30 years. That pressure is only ramping up as LNG spot prices increase, and LNG and coal have been the major source of backfilling their energy market after they turned off nuclear. Now, as a result of that, we do, as we stand, have 9 reactors that are recommissioned. And it wasn't that long ago that we were struggling along in this industry with only 1 recommissioned reactor. There's another 17 that are working their way through the process of gaining permission, both from the regulatory bodies, but also the local communities to turn back on. And I see that playing a slow burn demand growth over the coming 5 or so years.
We are hearing that one of the Japanese utilities is looking to sell quite a modest amount of its inventory. Is that right? And what that can mean?
Well, without commenting on any specific utilities, what is in the public domain is that Cameco has admitted trying to find loose uranium out of the Japanese utilities, and it's been unable to do so. So I find that quite telling. And that's consistent with the general view about how Japan would treat its excess uranium. In other words, it spent many decades building up its own energy security, and it doesn't make a lot of sense for them to allow that uranium to go outside of Japanese control. It might very well move between utilities, and there are some utilities that will never operate reactors again, but I don't really see any level of scale escaping into the broader market. What we are watching quite carefully is decommissioning fuel rods that were inventory for reactors that will never turn on again. So of the 49 reactors that Japan had prior to the Fukushima incident, 9 have turned on, 17 are in the process of turning on, and the balance have been retired early. But what we need to remember is it's quite an exercise to take the fully fabricated nuclear fuel sitting in fuel rods and downgrade it to something that's more applicable to other reactor technologies. So it will become available ultimately into the market, but I don't see that happening anytime soon.
Okay, and what is the world time scale on increased nuclear power stations? In
It's
your
growing
views?
steadily. So nuclear power stations are growing steadily. There is some reduction in demand through nuclear power stations being retired. And my expectation is we will see that as a trend reduce because of the very important role that nuclear plays in terms of baseload emission-free energy. In terms of the growth side of things, depending on which scenario you adopt, I would expect to see a doubling of uranium demand by 2040, driven, of course, as we've discussed, by China. And that is a very, very significant amount of demand to get your head around when you consider that the projects that will be available in 2040 really need to be discovered in the next couple of years. And we're just not seeing that exploration being undertaken. So for that reason, I think we're going to see extraordinarily strong demand for uranium starting in the next decade and continuing all the way through the 2030s, 2040s and 2050s.
Well, let's talk a bit about your project in Namibia, which has been described by many as the biggest uranium project in Africa. How big is the project?
Well, the project is indeed enormous. We have a total resource of 271 million pounds of uranium oxide, and there is plenty of material underneath the existing pit. It just doesn't make sense to drill for it just yet. In terms of annual production, we have a reserve base of 130 million pounds, which gives us a minimum mine life of 16 years at an average production of 7.2 million pounds per annum. So that would place us in a top 10 uranium mines by production in the world by the time we're in production. And importantly, we aren't aligned with either any majors or any state-owned entities. So we can lay claim to being the largest undeveloped project that isn't aligned with one of those groups that has the benefit of a feasibility study.
Okay, so let's talk a little bit more about the development plan. What is next? And also, can you give us some reference to the timeline of the operation?
So we completed a definitive feasibility study all the way back in 2012. And since then, we have optimized the project. We completed a mining optimization study in 2015 and a processing optimization study in 2017. But we haven't just been sitting still. We constructed a heap leach demonstration plant. Effectively, that's a pilot plant. And we ran that for 3 years to gain invaluable processing information, but also to absolutely be certain that there's no risk in the heap leaching process. It is something that makes financiers nervous, but with the quality of the data and the scale at which we undertook this demonstration plant, I think we've really put that beyond all doubt.
Okay, so the break-even cost, if I'm not wrong, is $52. What are your plans to reduce capex and cost?
So the plan, and you're quite right with that, that was a number that was published in 2015. So we have been steadily working through opportunities to reduce that, and we have made good progress. In 2017, we released a processing optimization study that reduced our capex by about 10%, and it also gave us indications that we would see operating costs reduced by more than $3 a pound. So we're making good progress there. There's other work that's undertaken at the moment. But in terms of giving a time frame both to the work that we're doing and also to the project development itself, that's a very difficult thing to answer until we have more clarity on where the commodity price is sitting. What we don't want to do is we don't want to rush the current optimization work that we're undertaking. Time is our friend at the moment, and we're producing it very, very cost effectively through using internal resources and not being under time pressure. And the other thing is to complete an updated DFS, which is the process we're undertaking. We don't want to do that until we're close to financing, because otherwise the numbers can go stale and also vendors are less likely to give their best pricing. Once we are financed, it's 3 years to full production. So 3 years to achieve 7.2 million pounds on average as an annual production rate.
Okay, but you are now fully funded with a new cornerstone investor, which is Tribeca Investment Partners. Is this enough to bring you to the financing stage? And then what are your plans? I mean, are you going to produce or probably sell the project before, as the uranium process rise, you might be taken over, you know? What are your plans?
Well, to answer your second question first, we're of course moving towards developing and producing from this project. We've got an extremely good team in Namibia. The technical work over the last 10 years has been done exceptionally well, and this is a mine that can be built. It's very large, but it's also relatively simple. It's very consistent. It has a whole bunch of different attributes, particularly with the good work that we've done on metallurgy through the processing optimization study and also the heap leach demonstration plant. So we're ready to build and we're ready to finance when we get our market window. Having said that, of course, we are listed on a stock exchange. We are aware of the commercial realities of being listed on a stock exchange, and the history of uranium boom suggests that consolidation phases generally follow an uptick in sentiment. So we're also realistic about the opportunity and the prospects of finding ourselves building this project, but with a much bigger balance sheet.
Okay.
The $7 million in cash that we have at the moment, that's enough to either take us through to a financing decision and all of the associated documentation and negotiations and due diligence associated with that, or alternatively, if there was a corporate action, we would have enough money in the bank to pursue the best value for shareholders without being under the duress of a poor cash position. So we've got enough money to see this cycle out through to an outcome.
Okay, that sounds pretty encouraging. What are your thoughts on specialized investment funds buying uranium at this price?
Well, they're playing a very important role at the moment, Stefania. 12 months ago, there were only two specialist funds of any note in the world. There was the Geiger Counter Fund, which invests in uranium equities listed on the London Stock Exchange, and there was Uranium Participation Corp, which invests in the physical commodities listed on Toronto Stock Exchange. Just in the last 12 months, because of the huge increase in sentiment, particularly amongst the smart money that we're seeing, we've had something of a boom of specialist investment funds. Buying into the physical commodity, we've had Yellowcake that announced an intention to list in June last year and subsequently listed and has purchased more than 10 million pounds out of the market. And those pounds are sequestered. It's not a buy and sell strategy. It's a buy and hold strategy to enable Yellowcake to be traded as a synthetic instrument to uranium. But also on the equity front, we've seen a whole range of specialist equities funds being capitalized and established. And we're now seeing those funds investing into the sector. And I'm very proud to say that the best quality of those funds are on Banneman's register. You mentioned Tribeca already. Geiger Counter Fund is also on our register. L2 Capital out of Brazil is proudly on our register. We also have Station Cove Partners on our register, and also Otlana Asset Management. There are others, but they haven't made those statements public, so I'd rather not comment on that.
Okay, so that's very good. Finally, I had some investor asking me whether you think that Russians, Saudis or Indians would be potential buyers or African uranium assets like Banneman Resources.
Well, a project like Banneman Resources, without talking about us specifically, because of the sheer scale that Etango has, we can service approximately 17 nuclear reactors. And what that does is that puts us in a very unusual and special situation and of interest to the very large nuclear power development programs, the Saudis, South Korea, other parts of the Middle East, India, of course, Russia, and we talked about China. It's the capacity to produce the uranium that underwrites a very substantial infrastructure investment decision, which is those scale nuclear power rollouts, that makes us attractive. The other thing that's important to understand is Namibia is very uniquely positioned amongst the geopolitical world stage. Namibia has a history of cooperating with Russia, a history of cooperating with China, a history of cooperating with the US and the West, and it has inbound investment from the Middle East as well. That puts us in us and other Namibian projects in a very special category where we can invite and look after investment into our projects from almost every corner of the world.
Okay, so I'm sure that you are already taking some of those conversations, but let's wrap it up. We mentioned at the beginning that everything in in the uranium market might take a long time to play out, but the fundamentals are certainly here for the uranium price to go higher. Is it now better to wait, or investors should basically buy into what they believe are the best opportunity in the market?
It's going to always depend on an investor's risk profile, but in this case, it depends more on their patience or lack thereof. If an investor's looking for a return or a trade of less than 2 months, then they probably want to wait. If they're prepared to be patient for even 3 months and longer, I would certainly advocate doing your research now, undertaking your investigations, and considering taking a position. I say this because there's a significant outflow of capital from uranium equities at the moment because of the uncertainty of Section 232. And this uncertainty has produced the feeling amongst some investors that it could be a bad outcome. But as I said before, I do not see a bad outcome coming out of Section 232 in terms of the uranium price. So what I would advocate for an investor who does have a little bit of time on their side is now is an ideal opportunity to start getting positions in uranium stocks that you're comfortable with. The downside is very limited. The upside is extraordinary, and particularly in a stock like Banneman Resources, where we don't need to raise capital. We've done all of the work on the project. We're in an ideal jurisdiction to take advantage of the upcoming uranium dynamics. And we have an absolutely enormous project that gives us exceptional leverage to the increasing uranium price that we expect from the next bull run.
Okay, Brandon, thank you very much, and I really look forward to have you here in the studio with me over the next couple of months when you are gonna be in London, so you can update us on Banneman Resources, and also we can see how the uranium is playing out. That will be fantastic.
I certainly look forward to that, Stefania, and thanks very much for having me.
Okay, thank you very much, Brandon. Good luck in Namibia. This is everything from the Financial Fox. See you next time.